For years, investors believed the biggest opportunities in cybersecurity were cloud security, endpoint protection, and AI-powered software. Network security, meanwhile, was often seen as a mature market with limited growth potential. Fortinet was caught in that narrative. But today, that story is beginning to change. Not because of a single earnings report. And not because of another AI headline. The real shift is happening inside enterprise networks. As AI, hybrid infrastructure, and digital transformation make corporate environments more complex, securing the network has become more important than ever. And that raises a much bigger question. Has the cybersecurity industry entered a new phase, and is Fortinet quietly becoming one of its biggest winners? Let's find out. For nearly a decade, cybersecurity spending was driven by one simple trend: move everything to the cloud. Investors rewarded companies protecting endpoints, identities, and cloud workloads because that's where enterprise IT budgets were rapidly expanding. But enterprise infrastructure never became fully cloud-based. Instead, most organizations built hybrid environments, combining on-premise data centers, multiple public clouds, remote employees, connected devices, and now AI workloads. Every new connection expanded the attack surface and increased the complexity of securing enterprise networks. The result is a fundamental shift in priorities. Today's challenge isn't just protecting individual devices. It's securing the network that connects everything together. For years, cybersecurity investment focused on protecting endpoints because that's where employees accessed corporate data. But AI is changing how enterprise infrastructure operates. Large AI models require massive amounts of data to move continuously between users, cloud platforms, data centers, and edge devices. Every connection creates another potential entry point for attackers. As a result, the network is no longer just a channel for moving data. It has become a critical layer for inspecting traffic, enforcing security policies, and preventing threats before they spread across the organization. In the AI era, protecting individual devices is no longer enough. Securing the network itself is becoming just as essential. If the industry's priorities are shifting back toward network security, the next question is whether Fortinet is actually benefiting from that change. Its latest results suggest the answer is yes. After several quarters of slower growth, Fortinet delivered improving product demand while its high-margin services business continued to expand. Management also raised its outlook, signaling confidence that customer spending is becoming healthier rather than weaker. For investors, that mattered more than the headline numbers. It suggested that the slowdown wasn't the beginning of a long-term decline. Instead, it may have been a temporary cycle before growth began to accelerate again. Revenue growth may attract attention, but long-term investors care just as much about the quality of that growth. In Fortinet's latest results, profitability remained exceptionally strong. Operating margins continued to rank among the highest in the cybersecurity industry, demonstrating that the company can expand while maintaining disciplined cost management. That matters because high margins give Fortinet more than just higher earnings. They provide the flexibility to invest in research and development, expand its platform, and continue returning capital to shareholders without sacrificing financial strength. For the market, this wasn't simply a story of growing faster. It was a story of proving that growth can be both profitable and sustainable. Strong earnings can be influenced by accounting. Strong cash flow is much harder to manufacture. That's why many long-term investors pay close attention to free cash flow rather than earnings alone. Fortinet has consistently generated substantial cash because much of its business is built on recurring security services, disciplined capital spending, and efficient operations. This allows the company to fund innovation, strengthen its balance sheet, and return capital to shareholders, all without relying on external financing. In other words, Fortinet isn't just generating profits. It's consistently turning those profits into cash, and that's one of the clearest signs of a high-quality business. For many investors, Fortinet is still associated with firewalls. But that view no longer reflects how the business has evolved. Today, the company offers a much broader security platform that spans secure networking, SaaS, SD-WAN, operational technology security, and security operations. Instead of selling a single product, Fortinet is increasingly helping enterprises secure users, applications, data, and infrastructure through an integrated platform. This strategy creates two important advantages. It expands Fortinet's addressable market, and it encourages customers to adopt multiple solutions from the same vendor. The result is a business that's becoming less dependent on any single product, and more valuable with every additional platform customers adopt. For Fortinet, long-term growth isn't driven solely by adding new customers. Increasingly, it's about helping existing customers adopt more of its platform. A company that initially deploys FortiGate firewalls can later expand into SD-WAN, SaaS, security operations, or operational technology security, all within the same ecosystem. That allows customers to simplify security management while reducing the complexity of integrating products from multiple vendors. For Fortinet, the benefits go even further. Every additional solution strengthens customer relationships, increases recurring service revenue, and raises switching costs over time. The strongest platform isn't the one that sells the most products. It's the one that becomes the hardest for customers to replace. Artificial intelligence isn't just creating new software. It's transforming how enterprises build and operate their infrastructure. Every AI application generates more data, more network traffic, and more connections between users, cloud environments, and data centers. As organizations deploy AI at scale, the complexity of securing those environments increases dramatically. That shift is creating new demand for high-performance network security, where traffic can be inspected, segmented, and protected before threats spread across the enterprise. Fortinet doesn't need to become an AI company to benefit from AI. It simply needs to secure the infrastructure that makes AI possible. Cybersecurity remains one of the fastest-growing areas in enterprise technology, but it's also one of the most competitive. Palo Alto Networks is expanding its platform strategy. CrowdStrike continues to lead in endpoint security. Microsoft is bundling security into its enterprise ecosystem. And Cisco remains deeply embedded in global network infrastructure. That means Fortinet can't rely on industry growth alone. Its long-term success depends on continuing to innovate, expanding customer adoption across its platform, and maintaining the profitability that has consistently set it apart from many of its peers. The opportunity is significant, but so is the competition. And that's exactly why execution matters more than ever. Stock valuations rarely change because of one strong quarter. They change when investors begin to see a business differently. For years, Fortinet was largely viewed as a firewall company with slowing growth. But today's investment case is becoming much broader. The company is combining resilient product demand, recurring services revenue, industry-leading profitability, strong free cash flow, and an expanding security platform, all while benefiting from a structural shift in enterprise network security. That's why the conversation is changing. The market isn't simply rewarding stronger earnings. It's assigning a higher value to a business that appears more durable, more diversified, and better positioned for the next phase of cybersecurity. The strongest investment theses aren't confirmed by one exceptional quarter. they're confirmed by consistency. For Fortinet, investors should focus on a few key indicators. Is product revenue continuing to recover? Are customers adopting more of the platform over time? Can operating margins remain among the industry's best? And most importantly, is strong free cash flow continuing to support investment and long-term growth? If those trends continue, today's higher valuation could prove justified. But if growth slows again or platform adoption loses momentum, the market may begin to question whether this was a lasting transformation, or simply a strong recovery following a difficult period. The cybersecurity story hasn't changed because one company reported stronger earnings. It has changed because enterprise security is entering a new phase, one where protecting the network is becoming just as critical as protecting the endpoint or the cloud. Fortinet didn't reinvent itself overnight. Instead, it spent years expanding its platform, strengthening its profitability, and building one of the most cash-generative business models in the industry. Only now is the market beginning to recognize what that evolution could mean. Whether Fortinet ultimately becomes one of the biggest winners will depend on its ability to keep executing. But one thing is becoming increasingly clear: this is no longer just the story of a firewall company. It is the story of a business that may be better positioned for the future of enterprise cybersecurity than many investors once believed. As always, this video is not financial advice. Please do your own research before making any investment decisions. Thank you for watching. If you found this analysis helpful, don't forget to like, subscribe, and I'll see you in the next equity research.